guys, what's up? Ramo here, and welcome to this little summer nostalgia reise from beautiful. You came crawling back to me, saying you were unbelieving. I should know you were just lonely. Felt like it when you hold me. I never felt better. About to leave and never. Then one day you came in with the backs of my sweaters. Right when I was thinking forever. Then we went up in. Oh, I'm never doing this again. Then we went up in. Oh, I'm never doing this again. Then we went up in. When your eyes meet mine on this summer night, I feel something new and deep inside. I got you on my mind, and for the first time, I found what I knew that someday I'd find. When your eyes meet mine on this summer night, I feel something new, yeah, deep inside. I got you on my mind, and for the first time, I found what I knew. Yeah, someday I'd find somebody like you. Somebody like you. Somebody like you. Somebody like you. When your eyes meet mine on this summer night, I feel something new, yeah, deep inside. I got you on my mind, and for the first time, I found what I knew. Yeah, someday I'd find. When your eyes meet mine on this summer night, I feel something new, yeah, deep inside. I got you on my mind, and for the first time, I found what I knew. Yeah, someday I find somebody like you. Somebody like you. Somebody like you. When you're acting funny on this summer night, I feel something new, yeah, deep inside. I got you on my mind, and for the first time, I found what I knew. Yeah, someday I find somebody like you. Baby, I want to take you home. If you need a heartbeat, you're not alone. Baby, I need to feel you close. And you know that I know that I'm right for you. Baby, I want to take you home. If you need a heartbeat, you know. Hey, what's going on, everybody? Good morning or good evening, whatever, wherever you're at. Welcome. Pleasure to have you guys. And as usual, thanks everybody for joining, along with the speakers, Polytrade, Cogito, Finance, Horizon Protocol. Oh my gosh, super stacked, and I can't wait to get into the subjects. But let's just go around. Let's just start talking to people. Get to know everybody that's joining us. We have a few repeat speakers, which I'm super stoked about. Always love that. We got some new faces around town today, and I'd like to
just chat with you guys for a sec while we wait for a few of the other speakers to join us. Polytrade, what's up? How's it going this
Hey,
morning?
hey, all good. Thanks a lot for having us. It's a lovely day. Rained all day here. It's kind of refreshing after having a scorching heat of 50 degrees Celsius. It kind of feels great. How about you?
Oh my gosh, yes, yes, absolutely. I just woke up like a few minutes ago. It's super early, so I'm just having coffee, and it's already about 90 degrees Fahrenheit here. I think 50 degrees Celsius or Celsius, 50 Celsius is like maybe like 110 or something crazy like that Fahrenheit, right? Or what's
Yeah.
the conversion for that?
Yeah, you're correct. Must be around that. But we use Celsius here, so I'm not very well versed with Fahrenheit. But I think, yeah, you're right. 122.
Oh my gosh, you could like cook some eggs on the pavement or
Yeah,
something.
for sure.
Make a little breakfast on the road. What's up, Stanton? How we doing, man?
Hey Eric, good. It's for me, I'm based in Shanghai. It's evening here. We just had a lot of it's been really warm in Shanghai recently. I think all of us are feeling the effects of climate change more apparent ever than ever before. Um, but yeah, we just had a lot of rain just now for an hour, and so it's cooled down a bit, but I think it gets hot again tomorrow.
Amazing. I would absolutely adore to visit Shanghai. Oh my gosh, do you love living there?
I was based in New York before Shanghai, so I'm pretty comfortable with big cities, but this is one of the more fun places to live, I'd say.
Okay, definitely. Yeah, I that's one of my cities that I have to visit as soon as possible. I'm
Please
just
hit me up if you're here.
oh for sure. Oh, definitely, 100% would do that because I have no idea what I would be doing. And is it pretty English friendly, or would you say I need to learn the local language?
It's very English friendly. Just don't try to use Tinder here because the first couple ones you'll get are scams, and they'll they're called T scams, but basically what they do is they invite you out to get drinks, and then they'll take you to a drink parlor that is um, somehow tied to them, and then once they sit you down, get you to buy a few drinks, you rack up a bill of like $1,000.
Wow. Well, thanks for the tip. I definitely won't do that, and not trying to get drained, from the Web 2 wallet.
Yep.
Awesome. Well, pleasure to chat with you again, Stanton. Thanks for coming, brother.
Thank you for
Amazing.
having me.
Kajito, what is up?
Hey, thanks for the invite. And yeah, it's evening for me as well. I'm currently based in Hong Kong and very happy to be here today. Yeah, to speaking with all of you.
Amazing, man. I always love having you. And this is Kenneth, right?
Yes,
Okay, yeah, love having you, and I can't wait to ask you questions because you always bring in the heat of really making us understand what's going on in the space with RWAs. So super stoked to have you. Thanks for joining us again, man.
awesome.
Nice, nice. Well, everybody, sounds like we have our panel here, and we got some heavy hitters. So don't hesitate to drop some comments down below. We might answer some questions from the comments today. We're not sure, but we have a whole bunch of interesting things to talk about. And I'm not the expert; these guys are. So I'll be asking the questions, and they'll be the bringing some information. So get a pen and paper down, jot down some notes. There might be some alpha, there might not be. Who knows? But we're here, and we're going to talk about some RWAs. But before we get into that, I'm Eric. I'm with Web3M. We created a platform called the Collab Hub. The Collab Hub cultivates organic partnerships between companies like these. And one of the organic marketing partnerships that we're doing is we hold Twitter Spaces, and that's how we got together today. So if anybody in the audience has a company and they want to partner with other companies such as these, sign up to the Collab Hub and start signing up to Twitter Spaces, and we'll get you on here. So thanks so much, everybody, for coming. And let's just go around the horn one more time, and let's get if you guys wouldn't mind introducing yourself, your name, and then a little bit about what you guys are doing. So, Polytrade, please start us off. That'd be great.
Thank you. Yeah, so this is Shreya. I've been associated with Polytrade. It's almost been 2 years. I take care of everything marketing here. And about Polytrade, so we've built a global kind of a gateway for RWAs. So we essentially kind of onboard and aggregate different assets that currently get tokenized in silos. We partnered and backed by, industry giants like MasterCard, Polygon, and about the marketplace in a little nutshell, it's kind of bringing together T-bills, credit stocks, real estate commodities, as well as collectibles, some art drops, IP, and creator royalties as well. So we're kind of moving and venturing into more and more asset classes from here. And we also have our own ERC standard, which is called ERC 6960. This kind of enables users to discover, trade, and fractionalize assets, and simply do more like leverage with these RWAs. That's about us. And again, thanks for having us.
Oh, awesome. Thank you so much for that intro. Can't wait to get into more about what you guys are doing. Awesome. Kajito, Kenneth, what's up, man?
Yeah, hi all. This is Kenneth. I'm head of BD at Cogito. And essentially, Cogito, we tokenize traditional TradFi assets and make it accessible for Web3 projects and Web3 companies. Cogito was founded in 2022. It's a spin-off project of Singularity Net. And one of the, I guess, founding principles of Cogito is due to the bear market, in the last cycle, we saw that there's a lot of crypto projects coming into the space, which is great, but a lot of them, lack the basic fundamentals around diversification. So unfortunately, a lot of projects that we have seen in the market do fail. Some of the founders that I speak with, went all in on Bitcoin, for instance, and some even on meme coins. And arguably, that's not the best way to run a company and ensure financial stability, for your staff, etc. So essentially, by tokenizing TradFi assets like T-bills, stocks, and bonds, we provide options, right, for crypto projects for capital preservation. And we hope by doing this, it will, help the industry to become more reputable, more compliance friendly and stable. Yeah, so that's Cogito in a nutshell. Yeah, I'm happy to be here.
Oh, lovely. Love what Kajito is doing. Thank you so much for that awesome intro, Kenneth. Can't wait to get into more. Amazing. And Jasmine, we didn't get a chance to just chat briefly, but hello, how you doing?
Hey, yeah, I'm good. I guess it wasn't letting me in for some reason, but I'm here. Hello, everyone.
Okay, no, that was my fault. So sorry, but so glad they were able to bring you up here. How's it going today? Where are you calling from?
I'm in Darwin, Australia, so it's quite late here, but
Oh wow. Okay, what time is it there for you?
11:45 p.m.
Oh my gosh, yeah. Web3 never sleeps, so we do appreciate you joining at such a late hour to meet with our schedules. I'm just like I said, I'm not sure if you caught that, but I'm just waking up a couple minutes ago and having coffee.
Yeah, I'm used to the working with lots of time zones on the team, so it's quite normal.
Awesome. Well, again, thanks so much for joining us. Can't wait to get into what you guys are doing. And if you wouldn't mind giving us a quick little intro to yourself and then the company that you're with, that'd be great.
Yes, my name is Jasmine. I'm the CEO of Rejuve.ai, which is another Singularity Net spinoff. So our project is all about longevity, about making people live longer. Um, so it's a bit different as to we're not exactly tokenizing assets, but more so data ownership and IP. So yeah, that's what we do. We're creating a ecosystem and network, pretty much a wellness and longevity economy for people to be able to monetize their health data, earn token rewards, and then use them in exchange for health enhancing products and services, which include some tests to be able to feed more data into the system and earn more rewards, and get AI driven insights as well in exchange for that.
Amazing. I 100% need help being incentivized to eat good. I'm not sure if you guys have McDonald's, but we have one right down the road. And sometimes I choose that. So I don't want to be incentivized to eat McDonald's. Maybe go to Green Foods or Whole Foods and be incentivized, maybe.
Yes, exactly. Get them accepted in RJV, and we're good.
Awesome. Thank you for that awesome intro, and nice to meet you, Jasmine.
Nice to meet you.
Amazing. Stanton, what's up, man? Tell us a little bit about you and Ryzen, please.
Yeah. So I'm the education director at Horizon Protocol. I have a tech background, and what I'm doing for the project is really just trying to make what we're doing more digestible. The protocol, what we're doing is we're a decentralized derivatives trading and liquidity protocol, which sounds really complicated. And the simple way to think about it is we're trying to make it possible and easy to trade real world assets on chain. Our focus is on derivatives, so we're not trading. You're not buying actual assets, so we're not doing direct tokenization like Polytrade and Cogito. We're more focused on making it possible to get the price access, basically just access to real world assets like what am I trying to say? Different equities, different fiats. Um, Anything that has a price movement, being able to buy it from crypto, like within cryptosphere directly. So we just launched our futures, perpetual futures exchange. We have a spot exchange, and generally we just want to make it easy for everyone globally to be able to get access to things like Nvidia stock or Japanese yen, etc., anywhere in the world.
Oh, that's amazing. That's like the epitome of bridging Web 2 and Web 3, so it's accessible for us all. So appreciate what you're doing and with the education and along with Horizon, man. Thank you so much. Amazing, everybody. Thanks for joining, and we're going to get right into the questions. But don't forget to like, retweet, and comment on the post and get some more people in here. Let's talk about RWAs. Let's get into it. All right, I've been waiting all week for this, and we're here. So, and if you guys want to just like raise your hand, you guys can just jump up and talk, whatever you'd like to do, or just raise your hand, whichever you would prefer. Doesn't matter to me. Very open discussion, open chat. So, what is RWA tokenization, and how is it different from traditional asset management? Let's start from the ground floor. What are RWAs? Yes, Polytrade.
Yeah, I think I'll take that one first, because that's what we do. We've seen the long and short of tokenization and then kind of developed this solution. So I think, yeah, I would be best to answer this. So just for somebody who's listening for the first time about RWA, so it's essentially converting assets like real estate or commodities or financial instruments that are usually there to invest in the Web2 world into digital tokens on a blockchain. So this kind of offers you, fractional ownership of, let's say, these assets. There's enhanced liquidity, and also you kind of get an efficient trading way of these assets. So unlike traditional asset management, which kind of relies on centralized systems and intermediaries, tokenization of real world assets obviously have blockchain technology backing them up for transparency, and there are so many reduced costs when you're investing into an RWA. And also you can 24/7 trade such assets, and there's no limitation of maybe time, or just the fact that it's just as easy as a click, and you can have like an asset call, or a real estate as big as a real estate in your wallet, just directly by investing on a platform in just a click.
Got you. Yeah, there's so many ways that RWAs could be introduced, and that's amazing. So whenever it comes to like traditional asset management, how does tokenization of RWAs differ from our traditional management of assets in Web 2?
I'll chip in a little bit here. I'm going to give an example of company ownership. So, if you are interested in buying shares of a company, you typically have to wait until an IPO. So a very formal process where the company shares are distributed to different sellers and you can buy it on the open market. Before that, you have to be in direct communication with the company. You have to be figuring out how many shares are being offered. You have to find a price. All of that requires a lot of manual work. And the incredible thing about a lot of crypto projects is that you can get in a sort of like an open market at the very beginning. And it's facilitated by the fact that we have these shares that can be created um, through crypto. It's transparent. There's no way to double count. And all of this is a process. This is a technology that didn't exist before because with distributed systems, there's no way to kind of fake it. You can't overwrite something like you could in a lot of traditional systems where it's more of a black box. You don't see exactly what's happening. And so I think the process of tokenization, which is bringing something on chain specifically for real world assets, is that it makes it much more flexible in terms of access. And what we are providing in terms of what crypto and what blockchain is providing is that technology layer to make it very easy to buy, sell fractional shares of something.
No, yes, Jasmine.
Yeah, that was a good segue with the fractional shares because I also wanted to bring up NFTs. So we know that, for instance, people have been using them to have shares in artwork, but it can also be in music and different forms like that. But NFTs can also be used for intellectual property ownership as well. So that's a bit different in the Web2 world where we can't really quantify things like that. And as far as application into medical research, for instance, for instance, a lot of us are wearing smartwatches, Apple Watches, things of that nature, and we're contributing data about our health and bodies to various companies, and we're not exactly in control of everything that happens with it. But with blockchain technology, we can actually track and trace where that data is going, how it's being used, and that begins to connect it to the real world value that it actually can provide and create an end-to-end system where it actually can return that back to you. So NFTs can be used for more than just pictures and games, but also to store value of intellectual property and data of all kinds.
My gosh, NFTs. We've seen the boom of the NFTs, but we're gonna have a circle around of utility for what really is the tech behind the NFTs. People refer to NFTs as profile pictures and all these PFPs and all this good stuff and art. It's awesome art and everything. You can pair awesome art with NFTs, but Jasmine just explained an awesome utility that NFTs will have much more utility than what we believe. And it's just like we're still in the discovery phase. I know we've seen this tech for a while now, but we're still discovering these kind of things, and it's very interesting to see these kind of things roll out. So going into that, how does blockchain technology enable the process of asset tokenization? Like what makes, and Jasmine kind of outlined a few of those things, but I would like to dive deeper into that subject to learn why is blockchain technology so important whenever it comes to asset tokenization.
I'll chip in here. So I think the term currently for asset tokenization is the process of putting something on chain. So blockchain, from a technical definition, is absolutely critical to this. I do think that the reason why this is important right now is because blockchain as a technology is making it possible for a lot of things to be less expensive, mainly the security part of making things easy to access and trade. And so, Jasmine was mentioning NFTs, for example. If we're talking about data, right? Because this is something that I'm also actually quite passionate about. currently data ownership is tied to large companies who are holding all the data centers, who are basically hosting all our data because they're paying for that. They're building services on top of that to make money off of it. Makes sense. What if there was a way for data ownership to go back to every individual um, without without some centralized entity paying for all the hosting of all the data? And that's something that blockchain technology might be able to help with because it's decentralized. Everyone in some way is paying for the technology, and um, it's designed in a way where there's not one central party that's hosting everything. And so, if you have systems like that in place, putting things on top of it like NFTs or different assets, different crypto assets on top of it. There's no centralized entity that's hosting everything. There's no clearinghouse. There's no bank. Nobody's in the middle because the security of the blockchain already kind of handles what normal middlemen do. It makes it so that we can now basically build an ecosystem where you're not working with just centralized entities. Everyone gets to own whatever they're owning, and the technology itself is handling all the security. So uh, this doesn't. I'm not sure if this directly answers the question, but I'm just trying to state like why blockchain technology and asset tokenization are so tied together and important, and why there's going to be a drive towards this in the future.
Yeah. Oh yes, please, Jasmine.
Yeah, and I guess just to add a bit more to that, another reason why it's important is because of the intersection of the privacy and security of that information or that ownership, and also at the same time the transparency of it. Blockchain enables kind of the visibility of where things are coming and going in a way that sometimes is more hidden when things are more centralized. We don't really know what's going on behind the scenes, but you can't hide anything on the blockchain. And there's a lot of cool things coming out around decentralized identity and zero knowledge proofs and things of that nature too that really increase that level of transparency while at the same time keeping the things private that are important to keep private.
Absolutely. Yeah. What about like scalability? Oh yes, Kenneth.
Yeah, I'll just chime in on that on the Cogito side. So because in the case of us, obviously blockchain is super relevant simply because of the utility that TradFi products bring, to the global Web3 ecosystem, right? Since no such products are, are available yet. The Web3 industry has been generally categorized as super speculative and risky. So we wanted to change that narrative by being the bridge and the infra provider to activate basically TradFi products on chain, bring TradFi products on chain. From in the past years, a lot of crypto projects and maybe those in this call today might understand that it's very hard to open, for instance, regular bank accounts and broker trading accounts if you are a crypto company. So Cogito, in a way, is eliminating that pain point for crypto projects, since a lot of centralized entity also only serve customers in the jurisdiction or offices jurisdictions they have an office in. But with Web3, by putting TradFi assets on chain, anyone in principle with a crypto wallet can gain access to a fraction of these real world assets from the comfort of their home. So that's why it's super important that that RWAs are coming on chain, and we see from the numbers as well, right? That the the RWA narrative, the numbers keep on increasing year on year. So yeah, it's a very bullish sign overall.
Absolutely, yeah. Democratizing the access to some of these resources. I was just talking to somebody the other day, and their protocol literally offers the same resources as if you were on Wall Street as a tenured trader. And those are some of the things that a lot of people don't see and they don't understand how massive some of the opportunities are in this space, how we're bridging over some of those things that have been so far, separated from us in the Web 2 industry because we've been controlled. And now, having this access and being able to take advantage of all the benefits that these large corporations have had, you know, is a major shift. And that's, so many people are like, oh, this is too good to be true. Well, it does sound too good to be true because, they're just, it's really changing how we interact. So there are so many different assets out there. There's so many different ways that we're going to be bridging over, whether it be data, or the data is really behind it all. But my question is what does asset tokenization? How does asset tokenization enhance liquidity for traditional illiquid assets? And I'll just list off like a couple, real estate, um, art. There's a lot of great pieces of art that are just sitting there, and their liquidity, it can't be accessible. So whenever you put it on chain, what is the difference? How does that enhance the liquidity of these assets, and how can we use that liquid now?
I think I'd like to take that one.
Yes,
So,
please.
uh, initially, when we started off in Web3, we were doing trade finance. That was 10 years, it was a decade long experience that we had in trade finance. We were essentially, when we got that on chain, we were funding SMEs with their requirements. We were doing invoice financing, and that is the first asset that we tokenized. And that's when we realized that tokenizing RWAs obviously enhance liquidity to an extent where it's not possible for traditionally liquid assets to have that kind of liquidity, right? So you said that bang on correct that real estate and fine art as a matter of fact is a very big example for that. I think tokenizing assets increases liquidity, but I think more than that, the fact that they can be fractionalized is a very big play here. Just by allowing assets to be divided into like smaller tradable units, that's kind of something in itself. So this kind of fractional ownership enables like a broader range of investors to participate, not kind of putting them in a barrier of investing, and then also it kind of increases market activity and liquidity. So let's say real estate and art, these are traditionally very liquid assets. Now these, when tokenized and fractionalized, become more accessible and tradable, right? And that's what we do at Polytrade. We authored this ERC standard for fractionalization, essentially just to solve the problem of making these assets more liquid in nature, and there's no ticket size. So there's a very huge property, let's say $2 million of value. Uh, you can essentially have a piece of it just as little as investing $10 of it, and then that is like a lot of uh, democracy in itself. I think the fact that they can be 100. We just recently also put a tokenized Ferrari on the marketplace. So that Ferrari just has like maybe 1,200 pieces, unique pieces made in the world till now. And the fact that you can have a portion of it just by investing 1,000 USDC, it's a lot of democracy in itself, right?
Yeah, I agree with what Polytree just said. The most important part is the fractionalization, just having access to that. Liquidity is essentially that you want this stuff to easily trade. So going back to like the company example that I made earlier, the reason why IPOs are done is because that way all the shares, like the shares existed before the IPO. But now they're offering a share to a public market so that there's more liquidity in the sense that um, more people get access to buying and selling these shares. So that's liquidity. A lot of traditional assets, there's one of them, and without fractionalization, without putting it into a marketplace, it's very, very hard to make it easily accessible. And so I think there's two things in play. One is the fractionalization, as mentioned by Polytrade. The second thing is, how do you make this fractionalization accessible to an open market? If you're going through the traditional route, there's a lot of red tape because there's a lot of governments involved, and that's not going to change even if we move it into crypto. But at this point in time, with crypto, because it's so global, there's more opportunities to invite liquidity from all over the world rather than from just certain regions of the world.
Sure. Yeah, accessibility is everything. And as whenever you're able to purchase, say a fraction of a piece of an asset, um, it's just really interesting to me how you're able to obtain the data and keep it accurate on the blockchain for people to purchase it, purchase that fraction. Yes, Kenneth.
Yeah, so just one more point, like on the accessibility front. I think in the case for Cogito, we tokenize Treasury as our first product. It's called T Fund. Although I would say UST bills is one of the most liquid TradFi asset till date. I think it's categorized that way. I think enabling it for the Web3 ecosystem will increase it further. Like if we look at the market today, like the number of cryptocurrency owners, especially for Gen Z and the newer generation, keeps on increasing, right? So definitely, like it will also cascade to other asset classes, both liquid asset classes and also illiquid asset classes. And also, like, wanted to share that we have a very interesting, I guess, opportunity and case where we have an institutional partner and investor from Central Asia, Kyrgyzstan. So I'm not well versed of that region, but I would say that access to regular banking services that we see, for instance, in Shanghai and myself in Hong Kong, we take that for granted, whereas in developing regions, access to these financial instruments and assets, like UST bills, for instance, is a challenge for them. And in the case of US Treasuries, they're currently offering a risk-free rate of 5% as an inflation hedge to a lot of these underserved markets. Web3 and asset tokenization is super important for these underserved markets.
Interesting. So, all right. So, fractionalized ownership, you're able to access. I just want to go back to the fractionalized ownership because I know that whenever it comes to users, there's a lot of people obviously that have the ability to purchase an entire piece of real estate or an entire piece of art or an entire whatever the asset is. But there's a lot of people that would rather just purchase a fractionalized part of that asset. But after you purchase it, it's great that you have it, but what are the benefits behind purchasing a fractionalized piece of an asset? Like what do you get from that? How do you use it?
So I'll chip in here a little bit. I think um, this is a really good question because I think previously a lot of times when people talk about this, we're just talking about, oh, this technology is possible. This is great. We can do this, that, etc. But now we're really touching on the actual marketplace piece and why people do certain things with in terms of why they're purchasing things. In most cases, I think this is more of an investment play. The reason why you would, let's say in China, previously the main kind of investment vehicle was real estate. If certain real estate were designed to be fractionalized and the way the real estate made money was through rent, um, that would be a way, that would be a reason for someone to invest. So, for example, in real estate, they have something called REITs, REIT, real estate investment trusts. These are essentially fractionalized buildings. So you would purchase a share of this REIT, and this REIT would represent that you're owning a building or a series of buildings, etc. And people buy this because it's an investment. They're expecting this REIT to go up in value over time, or it's making money to distribute dividends in some way. This would be one version of why you'd invest. If we're talking about artwork, it's the same idea. And so the key though is you have to figure out why you're investing in something. So like why you would pay for this. There was the example of Ferrari earlier. Cars tend to depreciate, so if it was fractionalization of a car, might be something more like a timeshare, where you own a certain percent of time for this car, and so you could basically they sell 365 fractions of this car, and it means that if you have two of them, you get to use that car for 2 days a year, something along those lines. And you could sell that to someone else if they want to use it for 2 days a year, etc. So it's about. I don't think there's a clear way for us to define exactly how this is used, but those are two examples.
Those are really good examples. Yes, Jasmine.
Yeah, so I think for the original question of what do you get out of the fractionalized ownership, I think it really does depend precisely on what kind of asset it is. Like for instance, with real estate, as mentioned, it could be that you want to just own a small piece of it because of it's going to go up in value, but it could also be on a more practical level. Like maybe you're wanting to buy a property with your family members and you want to split it 5 or 6 ways or something like that. So we can even bring it down to that level from the Rejuve perspective. For instance, let's say your data is used in a blockbuster drug. They invent some new therapy or something that extends lifespan by 10 years. And of course, it's going to, be sold monetarily. And now you actually have a piece of the ownership of that patent and that drug, instead of it just being, a major big pharma company that's getting the proceeds. You actually have a part of that too. So that's another way.
Oh wow, I didn't even think about that. Almost, being able to offer a way to get, you could even like set up a business plan, tokenize the idea, and then just get funding for the patent itself, and then the people that funded the patent would get ownership, partial ownership of the patent, and everything, and and also you had mentioned like splitting the house and being able to like pay for like 10% of the house, with family members and owning the house. But wouldn't it be cool to be able to like, because a lot of times to get citizenship in like a country, or a new place that you want to live, you have to have an investment in that country. That would be so awesome if all you had to do is get like if you had to pay and you had ownership of the home, and you only had to pay $100 for the home, but then you get citizenship in that country. There's just so many different ways that you can use these asset classes to benefit, on chain. And of course, it's all authenticatable. And if there's any squatters with the house, and you know all that on the blockchain. But a lot of these places, a lot of these different countries, they're still working on like a paper system. So that'll be interesting. Some of these places will take a little bit longer than others to transition, but the idea is interesting. So let's talk about security, because security and proof of ownership is really like I feel like the bread and butter of RWAs, of asset tokenization. So what security measures are in place to protect tokenized assets from fraud and hacking, and to prove your ownership with whatever asset?
I want to take this the other way, sort of. I think as a blockchain has a lot of security features, but the way that it's designed right now, it's might be a little bit lacking. Imagine if you, because the thing is, you can't really create this from scratch again afterwards. If you create an NFT for a apartment, let's say that you own, if you lose your wallet, that's going to be a really big pain in the ass. And so I think what needs to happen right now is there needs to be more interfaces with using RWA tokenization as the back end. So it's not something that normal people would interact with daily. It's more of a system for tracking everything so that it's like NFTs are non-fungible, so it's unique. There's only one copy of it. There can't be more than one. If it's traded, there's a clear transaction path of where it's been, who's had it, that kind of stuff. That's what the technology allows for. One of the biggest problems with, let's say, carbon trading right now is that it's so easy to double count because no one's keeping track of anything. There is no blockchain making sure that no one's using it twice, using the same carbon credit twice. It's a free for all. So that's what this would be useful for. But I think there needs to be a lot more infrastructure in terms of um, the user experience, and the user experience, it has to be tied to the real world. So something that I imagine happening in the near future is that banks will transition to using more blockchain technology. They'll tie more into crypto, and what they will be the front end interface to normal people. So using the bank, working with the bank, or working with whatever service, they're going to be the ones helping handle a lot of the interactions with the blockchain. For most people, you're not going to feel it. And so I think that has to happen before we really make this like adoptable by for most people at least. But until then, the idea that forgetting a few passwords means that you've lost a lot of access to something that you're supposed to own in the real world specifically would be really difficult to swallow.
Wow, that is a major challenge. I just didn't even think about it. The responsibility that we have is in Web3 is just sometimes it's a little unsettling, and especially I didn't think about that. If you had your wallet connected to your house and you lost your wallet, that's tough. I'm sure, as these problems arise, as we see these, we've seen these for the longest time. And I know that there's different, you know, Web5 wallets, coming out to mitigate those kind of responsibilities that us users have in Web3. But it'll be interesting to see how the tech evolves and what banks do to offer true ownership, because if the bank has the deed, if the bank owns the house, it's not yours, kind of thing. And Web3 is all about, true ownership and you having complete control over your asset. So there's going to be a middle ground there eventually. So let's talk about data. Oh, yes, Jasmine or Staten, please. Whoever.
Yeah, sure. Because just wanted to I guess speak a little bit on the other side of it. Kind of as Stanton mentioned, there's like kind of a front end and a back end. On the back end, it's quite safe. I mean, we have in the Web3 infrastructure several bodies that audit the contracts and can kind of check before it even goes live for vulnerabilities, and that's pretty standard now if you have any sort of legitimate project that you're working on. So you can be sure that on that side, nothing is likely to go wrong. And the way that the technology just inherently works. But yeah, the UX is probably the number one challenge in the space right now. And then the other way that you could go about it is, of course, with a centralized entity, which it seems that people would probably be more inclined to go for if they were not so familiar with the technology. And as a transitional phase, it would probably look more like custodial wallet. But as true kind of Web3 warriors that are all about the true original meaning of the tech, wouldn't want to go that way. And so there is still that. I mean, it's an open space really for people to develop solutions of how do we make this wallet and key thing a bit more connected in the real world. Like, can we actually put it on a physical item? I mean, we have like the ledger, but is there a way to actually have it be more something that we don't have to have a 24 word phrase, but it's something a bit more interconnected that is personal enough that is hard to steal, but also that you can look after it easier. So I guess that just means that there's a whole new space that's there to innovate.
Sure. Yeah, and digital, digital ownership, there's, with these challenges, there's always, people on the other end, trying to get through, the infrastructure and try to break down, what's being built. But from that, we just create better and better solutions and more, stable infrastructure for users to take advantage of, because without the people trying to get through the security lines, we wouldn't be innovating. So thank you to all the spammers. So whenever it comes to data, let's talk about the data. With RWAs, why is high quality off chain data so important for asset tokenization? That is the base that holds us all together. Why is it important?
I'll chip in, but I'm starting to feel bad because I feel like I'm talking too much.
Stan, you're the man.
Well, I think there's two parts for this. I think off-chain data is important for asset tokenization if um, if the asset has real world value. So we need to, if there's any kind of price feed related to this. So let's say there is we'll use real estate again. If there's a building, you want to know whether or not it's being transacted on anywhere else other than on chain. Because if it is, then you want to know how much other people are paying for other fractions of it. Because I imagine that if if it is the case that we're starting to tokenize, not all transactions are going to happen on chain. It's possible that some things happen off chain, but that data needs to get connected to whatever is on chain to make it so that we know what the price is. So um, I think we're going to touch upon oracles soon, because this is completely tied to this. The importance of uh, having price feeds from oracles is essentially that if we're connecting things from the real world to on chain, um, we need price feeds that we can trust. Otherwise, you're not going to have any data to transact on. So, for example, we'll use something that's on chain first. Bitcoin. If we're working with just different exchanges, each exchange might have wildly different numbers. If there was nobody arbitraging between the exchanges to try to even it out. I think there was a time where certain Korean exchanges were always off by 5 to 10% for Bitcoin because there was I don't remember exactly why, but essentially there was nobody arbitraging between those exchanges because it wasn't easily accessible, and so the prices were just off. But as the global market connects better, more arbitraging between different exchanges, the numbers are more even, and so now most exchanges are going to have very similar numbers. the the reason why this is important is mainly that if you want to make it market easy, like trustable, you need the numbers to be similar. Otherwise, if I am buying something for 20% higher than someone else over there buying the same asset for some different price, it's some people will feel they're cheated out of something, and it's not as strong as of a market because there's just too much price difference.
Sure, but you also have other markets that demand different prices for the same asset, right? So like I live in Las Vegas, and our prices for a new electric car are cheaper than somebody in the Midwest. So how how would you like structure a like the same price for the same asset? And I know like different assets I'm sure there will be assets that will be more easily controllable, the like instead of like the example that I just used, but the different markets definitely have different, prices for the assets.
I think you're completely correct on that. I guess where I'm touching on is more around fungible assets. So the US dollar, wherever you buy it, should still be worth the same thing at the end. But there might be different fees involved as you're going through the process of getting access to it. So that I'm kind of ignoring, but the result is that you do hope that all markets have the same valuation for that asset. Um, yeah.
And that actually brings up a great point with like the ownership having control of the price. Like it's not these large corporations that are creating these prices. We're almost going towards like a community based price discovery of the asset where everyone like contributes and they say, okay, this asset is worth this amount, in the future. We've already seen that with NFTs, with PFPs. We've always already seen so many awesome communities create, a structure for the price. But I can see that happening with any asset in the future. Picture this in 20 years. The people are going to be in control of the financial market completely. So that's interesting. I didn't even think about that, Stanton. And so you mentioned oracles. I want to get into oracles, and we're getting close to the end here. So I'm going to try to fit this stuff in. But this part's very, very important with bringing off-chain data to blockchain. So could someone in the panel explain what oracles are? Yes, Polytrade.
I think just before we go on the Oracle side of things, just wanted to add something that's already been discussed, just extension to what I feel why we need high quality off-chain data is because when you see RWAs, they usually, I mean, it's just an NFT, right? I can have ownership of it, but how do I link it to its real world uh piece of information, let's say? There's this protocol who, let's say, is listing some RWA and is providing some information, but I feel data fragmentation is still a very big problem for RWAs, and it will need some time to stabilize this. Maybe and price feeds, of course, is something that we need desperately, but I think something as little as, maybe an insurance, let's say, or something that validates this kind of data that is being conveyed is also really important because you wouldn't know. I mean, this is an NFT. You bought it, somebody bought it off you. Uh, there's a very big data trail behind that one asset. And how do you verify that? So again, oracles come and kind of bridge this barrier between the real world information versus this asset, and I think it's very important to maintain integrity of the entire space, and I think also the value of these assets.
Absolutely, 100%. Um, and the off-chain data. I mean, that's also another amazing opportunity for users because just like just like what Rejuve is doing, they're aggregating the data from user interactions, right? Is that right, Jasmine?
Yes, that's definitely part of it. It's both for the on the individual level, but then yeah, there's an aggregated aspect to it for the population level as well.
Got you. And so like users are able to provide their data and more than likely be, compensated for providing this digital gold, that we have been giving away for our entire lives. But now we're able to actually benefit from it. Yes, Staten.
And actually, Polytrade just mentioned the other part I wanted to say, and it's something that Horizon Protocol is not doing, but Polytrade, Cogito, and Rejuve all do, which is they're trying to bring data on chain or something on chain, and that means that we essentially need to police that data to some extent. It has to be value, like high quality data, as you're mentioning. Um, Obviously, like I'll use Reju for an example. One of the hardest things might be that there people could be faking data, and so how do you guarantee that whatever data is being brought on chain is real? Is going to be, I think, a, something that will be difficult to handle in terms of how you would police it. And I think everything that's not traditional financial data that is more kind of easy to audit is going to be difficult to bring on chain. And that's the interesting part. That's going to be work cut out for all the companies doing this. It's also why the trust part of the community building is so important, because uh, the companies, the projects that are doing this, it's so critical that they are trusted and that they're not going to burn this trust in any way, because it will just slow down the process of bringing stuff on chain and real world asset tokenization in general.
Yeah, that sounds like an extremely delicate situation for sure. And yes, Jasmine.
Yeah, well, it's a bit, yeah, I guess just to answer how we are tackling it. Yeah, because that is very important. And it's one of the first considerations and that kind of thing is how do you know that people aren't going to make, 50 accounts to game the system and gain tokens, right? So there's kind of two elements. I mean, one is kind of just using, we have to use a traditional KYC provider in the background at this point in time until these kind of proof of human protocols kind of mature to the fullest, where we can prove kind of one person, one account kind of thing. So we at least try to mask it as much as possible to issue them a data NFT, which is their decentralized identity, once we kind of get a verification from the third party that they have passed. So we're not actually viewing it ourselves, but we do verify that they did indeed get verified as a real person. And as it is kind of a medical thing, you do a consent form. And it's just the aspect too that you probably want your data to be accurate when you're tracking your health and you're getting these insights and biological age and these kind of things. Like, it doesn't really benefit you to lie about anything that you're putting in. So that's kind of the other way that we're buffering it.
Nice. A fair system, an honest system, all governed by itself. Super easy, autonomous, and scalable. And that's exactly why we're here. And that's exactly why we brought these awesome speakers. You guys brought some major information. I took down some notes. I got a lot to learn. And I think that about ends it for today, guys. Amazing stuff. If you guys have any closing remarks of anything that you guys want to talk about before we jump off the space, please do jump up here real quick. Would love to hear any closing remarks. If not, no problem. We'll definitely get you guys back up here again, and we'll talk about some more RWAs. And for everybody in the audience, don't hesitate to go follow these guys. They're building awesome applications, and they're the leaders in the RWA space. So if you want to stay informed and stay on top of the game, go follow Polytrade, Horizon Protocol, Cogito, and Rejuve AI. Gosh, you guys are awesome. And Staten, did you have your hand up a second ago?
Yeah, no, I was gonna. Our team just posted a little slide share at the top, so just highlighting that we did just launch after 3 years, we finally were able to launch a futures exchange, and so that's just me making sure, our team making sure that I'm saying that before we end this.
I love it, man.
Nice.
I love it. Yes. Yeah, Jasmine, please.
And I just said, nice. And yeah, thanks for inviting me here. It was an awesome panel, and glad that we are promoting this in the community and talking about this. And it's just great to see the Web3 space actually growing and maturing, and coming out of the kind of occult world and into more of the mainstream. So it's really good.
It was a
Oh,
lovely panel. Thanks again for having us.
amazing. Oh, I just love it. It's all happening before our eyes. And for all the listeners here, you're witnessing history in the making. So thanks everybody for joining us today. Pleasure to have you again. And for the winners from the giveaway, we're going to be giving 2 winners $25 each in USDT. And we're super stoked to give this giveaway away. I've already picked 2 winners. And after the space, I'll post your guys' names in the comments. Just reply to the comment and send us a DM, and we'll make sure to get you your USDT. So thanks so much, everybody. Have a great rest of your day. Bye-bye.